In the last video, we looked at a Bitcoin simple moving average strategy, and in this video, I'd like to take a deep look into the same strategy on Ethereum. So we choose the daily time frame, and like in the last video, I just apply a simple moving average here that you can see in white. For example, here I chose a period of 120, and I just want to compare the results with what we obtained in the last video with Bitcoin. So, as you can see, the strategy is very simple. We apply an SMA, so a simple moving average. Each value in white is just the results of here, the 120 last close price values. We just take the average of that, and we get the value in white for each day at the close timestamp. And when the close price is above, for example, here we have a fake out, we just enter a buy. So it's a long only strategy. It's not a short, we don't short at all. And for example, for this, you could use a very simple Python script, for example, that you can run on your own machine or on a server, on a remote server, for example, so that it runs when you sleep. Then it will enter, for example, when the close price is known and is above the white line. For example, here we take a long at this exact level. And then a few days later, it just closes below, and then we close the long. So here it would be a very small loss of about 2%. Okay? And sometimes we have big trades with this strategy. So essentially it's an SMA-price crossover strategy. When the price is above, we enter a long, and when the price is below, we close the long if any long is open. For example, here we would have taken a long at this level here, 137, and maybe we would have closed the long about here, maybe something like that. So here, I think, so at about 200. So it's a long of about 47%. And yeah, another thing, each time we enter 100% of all the capital that is allocated to this strategy. So it's kind of a compounding approach. And it would have taken, in this example, about 134 days, like 4 or 5 months. So it's better to be in spot market rather than futures, because in futures, of course, the funding rate would be due, and it would be, I think, quite a lot for that kind of duration for this particular trade here, 134 days. If you pay the long funding rates, maybe they are negative and they are paid to you if you long the market, but I don't believe so in these conditions. We would have to look more closely at the historical funding rates, but one, I don't have this data, and I think too that it's better to use the spot market. So overall, for such an SMA length of 120, you can see that we take not too many trades actually, and this is the whole point of this channel. Usually we want strategies that can be automated. This is really what I want to do on this channel. I study indicators and other data points, and I want many occurrences to get some statistical significance in the results. And once you have the confidence yourself that you can run such a strategy in an automated way, or maybe in a manual way, but it's harder. But I want to help you build a portfolio of automated strategies that you can run continuously. And for that, you have to know what strategies work and have some statistical significance. You want multiple trades and not like 20 or 30. It's not enough. Anyway, this strategy, I think, beats simple hodling, both for Bitcoin and Ethereum. That's what I was demonstrating to you in the last video for Bitcoin. For example, again, you can see here the strategy applied for Bitcoin. And I believe I chose the 120 length simple moving average. And yes, there are few trades. That's not exactly what we want, but yes, we have to respect the performance here, which is about a 40x that you can see in the blue line. Yes, even maybe a 50x. So you start with a capital of 1,000 in this particular case. That's what I've coded in the script, and you end up after about 7 years of strategy run, for example, manually or in an automated manner, you get a 50x. And it's better than holding, because while you hold, of course, I think you know Bitcoin. There was some time where Bitcoin drops like 70%. I think we had a 70% drawdown from $65,000 to the bottom $15,000. I think it's about that. So I repeat, just a reminder, a drawdown is the drop from an all-time high to the actual bottom you have at the current point in time. So the drawdown, you can measure that in percent, and usually when you trade, when you invest, you want as less as possible drawdown. So if, for example, your portfolio reaches, like, let's say $100,000, for example, and you started whatever from 50K or 10K, whatever, and it drops to like 70K, it's a drawdown of 30%. From 100K to 70K, it's a drawdown of 30%, and it's a lot. Usually, we aim for drawdowns like maybe 15%, and if you want to trade with more risk, of course, you can tolerate higher drawdowns. So the actual goal here for these strategies that I'm showing to you in these videos is to build a portfolio of as much as possible automated strategies that you can run, for example, in various scripts on a server. And when one strategy does not perform as much as you wish, you can just stop it or reduce the position allocated to this particular strategy and continue running the rest, the remaining ones. So like this, you have, like an investor, somehow, you just have a portfolio of multiple automated strategies that are completely automated, and the goal to be able to hold such a portfolio, you want to have conviction into the strategies you are running. Let's look now at Ethereum. It's the same length here as I showed to you for Bitcoin. It's 120 for the period, for the length of the simple moving average. And I wanted to explore, to do a sensitivity test around all the multiple values we could use for the simple moving average. Here is what we obtained for Bitcoin. For each SMA length, you can see first column is the multiplier. Yes, it's not in percent, it's just an X, a multiplier on your capital. And the best performance is obtained here for the length of about 120 to, let's say, 146. And you had over a period of 7 years about that. Since 2017, you had a multiplier of 46 maximum here. So it's a lot. Sometimes it's less. For example, 20 for an SMA of 158 length. So it's interesting because you can see that you have some kind of consecutive length that are quite good for performance and for the Sharpe ratio that you can see on the right column. And the Sharpe ratio is just a measure of performance. I will explain to you in another video what it is exactly, but maybe you already know what it is, what the metric represents. And it's a very good Sharpe ratio, as you can see, because it's above 1. And the performance obviously is absolutely good, and it's better than hodling, because in 2017 I believe it was about $4,000 for Bitcoin, for 1 Bitcoin. And at the end of this backtest that I just did here, it's about currently at 100K. Okay, it's about times 25. But here, with a simple SMA strategy, with a length of about 120, you had a 40x. Just the one thing that I don't like is the number of trades. Usually, I repeat, we aim for multiple trades, just not 24. I believe it's 24 for a 120 SMA length, and it's not enough trades to be able to have a lot of confidence in the strategy and to have the conviction that it will continue to perform in the future. Okay, so we really are looking for statistical significance, a good number of trades. That's why I'm going on this channel to explore multiple other strategies, and we could also explore the same strategy on lower time frames to get far more mini trades for our strategies. Again, we want to build a portfolio of automated strategies that you can run on many coins. Here is the performance for Ethereum for multiple SMA length on the left. The best multiple is about 20x for a length of about 100 and let's say 38, something like that. So again, we get a group of consecutive lengths that are not so bad for Ethereum, between 122 and 200, maybe and 10 or something like that. And the Sharpe ratio are usually good, pretty good for Ethereum for across all the variants here that we have run for our particular strategy, the simple moving average price crossover strategy. So they are above usually 1. So these are very good Sharpe ratio. Maybe you don't want to take 130. Why? Because just before you have a significant drop in performance, you could choose 100, for example, and 50, something like that. Okay, so I hope you see the point here. I wanted to explore in the daily time frame a strategy like that. So an SMA price crossover strategy, long only, with compounding 100% compounding each time. The only thing, maybe the only drawback I would see is that the strategies doesn't make a lot of trades, and maybe that's not what we want. For example, as you can see for Ethereum, 34 trades over 7 years is not enough. We want more, and that's why I want to explore the simple moving average on lesser time frames, like short time frames, like for example 4 hours, 2 hours, and 1 hour. And the main goal is to get many more trades and to get a better statistical significance, and so a better conviction in our automated strategies. Okay, so I hope you had some good value from these data points that I showed you today. If you like the video, please hit the like button and subscribe. Like this, you will hear from me in the next video.